Hello, welcome to smarthelping.com. We got a nice template here for fund management of a portfolio. So let's just set the premise here. So basically, this is a tool to track the activity of a fund with multiple members. You can track up to 20, or you can have up to 20 clients in the fund, and you can trade up to 50 assets. It's designed for long only funds where you're buying and holding for a while. It's not for day trading. It's more for positions that are held for at least a month. And if that fits your needs, this is going to be a great tool. So I'll go through each tab. I'll explain it. I'll also, after this video is done, I'm going to write up an instruction tab as well that explains exactly how to use this template. It's very powerful and it's pretty light. And it's pretty expandable if you need to do more clients or more asset types, uh, or get a little bit more granular. Um, it's really good at doing that. Also, it's going to use a waterfall structure that does allow for a management fee. It allows for a preferred return. And I'm talking a waterfall where the investors can decide, okay, we want X percent, or the fund can say we're going to offer X percent of all profits to investors up until the investors get X percent internal rate of return. And then the next hurdle, they can change the cash flow split and so on, or and it's all predefined before the fund starts. Um, but we'll get into all that. So a lot of cool logic there that's been integrated. Um, the manager can look at a lot of summaries, a lot of reports on the value of the fund over time, uh, all the different positions. Um, I'll go through it all. So first up, the client master tab is just where you're going to enter the relevant client names and the account ID here. These summaries are summaries up to 20 years. So the template is based on monthly activity over 20 years, and then it's annualized or summed up into annual buckets as well. So you can see total deposits of each client here, withdrawals, equity balance, total distributions of profit, and IRR to date based on all activities. Note that the um, it's assumed that all distributions that happen or all profits that are taken from a position are distributed. If clients are automatically reinvesting that, which is going to change their basis and how much of the share of the profits they get relative to the other investors, you would have to put in the deposit withdrawal, you'd have to put deposits of the amount they're reinvesting to work this properly. If they're not reinvesting, then the distributions just go out to them, and that's fine. And obviously, your trade and holdings are going to be dependent on, you know, what what the investors want to do with that and how you structure the fund and all that. Um, let's go to client report. So here you can pick up any client up to 20 here and change the customer ID. It'll change the name, the total deposits withdrawals of that client, the total profit distributions to date, and the IRR on an annual basis and a monthly basis. The monthly basis is different because that actually shows cash out month X, which is the deposit month, and then any cash distributions are counted as cash in. Again, if they were reinvesting, then this would be a positive, but their withdrawal or their deposit would also come through, and so it'd just be a net zero until there's actually a final liquidity event, um, or where they don't deposit anything. And so the monthly is just different time periods. It's a bit more granular. That's why it's going to be a more accurate internal rate of return calculation. But we show annual basis here as well, which just takes the annual activity of the client or customer, deposits, withdrawals, profit distributions, and just does the IRR calc on that, again, up to 20 years. You can also see for the client, their deposits, their profit distributions are these bars. The yellows are cumulative distributions, and then any withdrawals would show up if there are um, any. Also, you can see the month-end portfolio value of the entire fund, which is going to be based on prices over time and the holdings and positions and all that. It's automatically generated as you change price and also as you make transactions. Finally, you can see the holdings value by asset type of the entire fund, which all investors are invested in this in whatever the fund is. It's almost like a ETF or something. So this is what the fund activities were, the total value of just the holdings over time. Here we're just showing something where it's holding through 2029 and then it's essentially being exited at that point. Next up we have lists. So this is just going to define the amount of bundles and asset classes. Now bundles is a new concept I've come up with. It's the only way I've actually figured out how you can track where you have multiple buys and sells over time, and you need to figure out the right cost basis. So when you sell, you figure out the correct profit made on a trade or on a position. And like I said, it's long only positions, so buy and hold for at least a month or buy and um, you know and really this is for crypto a lot, or it turns up a lot in crypto. You'll see long only funds or buy only, but it could also be stocks, and there is functionality for dividends. So if we go to um, transactions real quick, the only rule that's complicated, so you just treat this like, you put the date, when, what asset class, the asset type. This could be a stock symbol or crypto symbol. Um, exchange that you're doing it on, and then bundle. So bundle, the only rule here is if you buy something, you can buy it in bundle one as many times as you want. So say you buy a tranche here, buy another tranche, you get some cost average basis. As soon as you start selling that position, you cannot buy it again, and time is going down here. So you can't buy, sell, and then the next time you buy after you've already sold it once, you have to do a new bundle. So you do bundle 2, and there's up to 40 you can do. This is the only way, because essentially each bundle is going to have its own cost basis, and this gives you proper profit capture. So again, you could buy like 3 times, you could sell 3 times, or however many times, but as soon as you sell, you can't rebuy more of it until you'd have to do a new bundle once you go into a second essentially run at the asset, and you want to buy more of it after you've sold some. And then when you go to sell, again, after that, you can pick which bundle you're selling from. I've got a nice inventory tab here which shows you by bundle how many units of each of the assets you own, and there's up to 50 assets that this will track. And that's again expandable as well, not too hard. You just drag the formulas. But you can see, okay, I've got X units in bundle 1 of this. I got, Y units of bundle 4 in this. And so you can pick, when you go to sell, you can pick the bundle and you know how much you have in each one that you can sell. And then based on the entry price, any fees, it'll spit out the correct total sale amount, your cost basis. This is the main reason why we are doing bundles, so you can get the correct cost basis, total cost, and profit or loss on each sale. Now, the only other thing with this that's complicated is the dividend. Well, it's not complicated, but you just need to know this, is every dividend you can keep in its own bundle. So you could say, okay, I'm going to designate bundle 2 as dividends. So any dividends you buy, any dividends you receive are marked as bundle 2, and anytime you sell uh, units from the dividend, you just keep it as bundle 2, and that can be perpetual because it's got no cost basis since it's just a dividend. So you're not, you just get receiving that amount of units. So when you buy it, it's just zero cost basis. And when you sell it, you could have fees, you could enter fees there, but other than that, there's no cost basis. So that can be all the dividends could exist in, like, say, bundle 2, and there's, you could have 100 dividends in there, and that's fine. It's just you have to have multiple bundles when you're buying, selling, buying, selling, buying, selling, and you're holding positions like over time that are um, you're not fully getting in and out of them, or you're entering multiple positions over time in a given asset. So it's really hard to do this, and normally I don't take on these jobs uh, in this because it is so hard. But I thought of this bundle idea, and that made sense to me, and that kind of solved the issue for tracking positions. So this is all the activity of the entire fund. All the investors, based on how much they've contributed relative to the other investors, are going to get a share of all the profits based on the activity that happens here. So the other thing you can track is, so this will show the portfolio holdings value of each asset over time. And this will just be based on the price. So the user is going to have to enter in the month ending price of each asset that they're tracking over, however long you're going to run the fund for, up to 20 years. So you can enter price here. This does not affect anything on the transactions. This, when you exit, you have to manually put in here. But the reason why I wanted to have this here is so a user could come in and see, okay, well, what has the holdings value of what you've been doing look like? So it'll reference the total units owned at the end of each month times whatever ending price, and that's how we are calculating, um, that chart on the client report over here. This one, also this one here. In Let's see, 68. Yeah. Okay. And then ownership share. So this shows based on the clients, different clients' deposits and withdrawals, how much percentage of the profits of the investor pool each one gets up to 20 clients. So that you can see their percentages here over time at the end of each month, profit or loss of the entire fund, and then the activity of the investor pool itself, as well as accumulation of that. That's referencing this, and this is the actual hard-coded dollar amounts of each client that they've deposited. And then you've got the portfolio value over time. So this is taking that, like I showed you, that price of each asset at the end of each month times the units owned at the end of each month to get a value of the portfolio units. So this is total units owned of each asset over time. Then we have monthly fund summary. So this is going to show across the whole fund how many deposits were there. This is for the fund manager. How many withdrawals? What were the asset purchases? What are the net sales? What are distributions available? Month-end cash balance, month-end principal still not invested here, and then month-end portfolio value, cash available to distribute. So you see when there's a sale, there's a sale here in July. There's a profit of 1.2 million. Now management fees, if you have if you enter percent, which you would enter on the cash flow waterfall right here, this percentage drives the management fee, which will accrue, and then whenever there's a sale, um, that will come out first. So there's a management fee here of accrued of 778,000 since the start of the fund. So that comes out, and then remaining cash after fees 420 will then go between, in funds set it up all different ways. If it's a 1% fee and then a 80-20 cash split, meaning the fund gets 20%, the investors get 80%, they would split the 80-20 based on this 420,000 that's remaining. Now I've done this a little bit more complex on the cash flow distributions where there's internal rate of return hurdles. So the LPs can come in here instructions and say, hey, we want 100% of all available distributions. It would still come after management fees, but after management fees, the LPs get 100% of any cash distributions up to 8% of their hurdle. And then if they breach 8%, then maybe it'll be 80-20 after that. And then you could do multiple hurdles here. And if it's just 80-20 forever, no matter what, you could just do 80-20 across the board. or this is more of like a hard preferred equity where it's 100-0 until this hurdle is reached. And that means the investor has gotten their money back and they've made 8% compounded return on their investment, or essentially their IRR is 8%. And if they never reach that, they'll just get any distributions that ever come out. So this takes timing into effect, which is very important. You can see each hurdle detailed down here and the summary of all the cash flows happening here by month. It converts these are annual hurdle rates. It converts that to monthly to figure out the actual distributions. So if you scroll over here, you can see on this sale, they never got past tier 1. There's a management fee. So since there was nothing in tier 2, the investor gets 100% of that cash flow. On the next sale, we scroll over here. We're still into tier 1 because it didn't happen until month 68. So the management fee is the only thing going to the fund managers, and then the rest of the distributions all go to the investor. And you can see the IRR is 19%, so we do get over that. Let's keep going here. Okay, so here's like the exit. You could say the fund end, and there's distributions. We got to tier 1, tier 2, tier 3, and all the way thereafter, so over 18%. And you can see that the total IRR is 19.8%. So we did get through to tier 3. And so now you can see there's a management fee for the sponsor. Tier 1 is again 100-0, so they don't get anything in tier 1. But now that the investors got over 8%, they get split 80. They get 20% here, 20%, 20%. And here's the final distributions for each for the LP and GP. There's also discounted cash flow analysis down here based on discount rate, net present value, monthly distributions by client. So here shows up to all the 20 clients, their percentage share as of month end, their distributions. So you can see here the amount that each one gets over time. You've also got deposits, withdrawals, net investor cash flows, the IRR of each individual. Now this could change if the deposit dates are different, and depending on how much our deposits are reinvested over time relative to each other, as well as what the activity of the fund does over time. Investor month-ending equity. This is essentially their deposits less withdrawals. You can see there. Then we've got a check down here. Then the same thing on it, but on an annual basis. So you can see investor distributions there, deposits, withdrawals, net cash flow, IRR on an annual basis, investor year-end equity. And then finally, here's the annual cash flow, and this is just showing the management fee going to the fund, the profit distributions to the fund, the total distributions to them, the deposits by the investors, any withdrawals, and then the LP investor profit total distributions, cumulative fund value beginning period, total sales, less management fees, cumulative net sales, ending cash not invested. So this will track if there's just cash sitting there, and the cumulative ending value of the fund, including cash. And then here's the holdings value, as well as the percentage change of that. And then here's the percentage share of distributions to the fund versus the LP, which is driven off the waterfall inputs. So a lot of work went into this template. I think it's very useful. You just gotta, watching this whole video will help, would have helped you be able to use it properly. And really, you could use it for a single individual, but it's really the robustness is to make it easier to manage a portfolio where you've got a fund, you've got members of the fund, and there's activity happening, and then each member is getting a percentage of distributions based on the structure of the fund. I try to keep it as simple as possible, but still granular enough to be useful, and that's always a difficult thing to do. I was really struggling on the price point of this. I think $75 is probably fair. The software to do this is very expensive if you're trying to buy software, and the ability of Excel to calculate these things with the feature of the bundles is the only way I could find to actually makes sense, and someone trying to do this individually is going to be hard. So I feel like $75 one-time fee will get you started here. It's pretty easy to edit. All the formulas are not, they're editable. Nothing's hidden. It's pretty easy to maneuver. Just follow the formulas and you'll understand what's happening. Nothing too fancy is being used on the formula side. Um, and I think this is a really good um, portfolio manager in Excel to manage a fund with. Like again, it's long only fund, up to 20 members, and it can account for dividends. All right, guys, that's all I got for you. The link will be in the description box below. I'll also post this on vendor sites, Eloquity Financial Models, CFI, and I'll see you guys on the next one.